Well, hello, hey everybody. James Clark, Broker Century 21 Alton Clark. I just wanted to come on today. It's Monday. Wanted to share just some quick information with you guys. Man, it is wild out right now. Not only is it wild because it's freaking freezing out right now, but the real estate market is nuts. There's a lot of activity, a lot of things going on. There's a lot of positivity out there right now, to be honest. Now, we've just come off of two great, amazing months, November and December. January is looking a little bit flat. So if you're a client watching this and you're thinking of buying, things are flat right now, just this month. And if you're a seller right now, you need to understand there's been some changes. So here are some of those exact changes, okay? Couple quick things. Existing home sales, 4.35 million. That's seasonally adjusted. That's where we're projecting to end the year, which is better than last year. We got about 3.3 months supply. 4 is when we can really say that it's a buyer's market, but it sure feels like a buyer's market. And by the way, these are national stats, not like state of Florida stats, which I'm going to give you in just a second. Just kind of showing you what the national picture is. Now, here's what the concerning part is. It's right here. The pending home sales index. A lot of people are calling it, oh, we're crashing. Nah, calm down. Yeah, it's down. Pending home sales are down 9%, which is obviously a concern. There's no doubt about that because that's an indicator of where January could close out. Like I said, we had two of the best months back to back in November, December that we've seen in a long time. Rates finally hit 6%. So we ended the year on a high. Well, the pendings kind of, punched us in the gut and said, hang on a second, don't get cocky. So we got to watch it, but things are still looking really good. I'm very optimistic. The last 3 years has just been terrible, but I got to tell you, I'm very optimistic for this year. Okay. Now, here's good news. Even though we were down, we are still the leader. Florida still has a net positive for inbound migration. The numbers shifted. It's gotten less, but like, for instance, we're 52-48, meaning we got 2% more people per se coming in than we should. That's a terrible way of explaining it, but we're 52-48. Okay. So we're still a net positive in that regard. So don't believe the hype that people are mass exiting the state of Florida. All right, real quick, because I want to move quick on these. I don't want to take up a lot of your time. I know you're busy. So I just want to run through the individual counties, Volusia, Lake, Orange, and Seminole counties. Here are some interesting stats. Volusia County, closed sales are up and looking good in Volusia. Seminole County, one of the interesting things is listings are down. Listings are up seemingly everywhere, but not in Seminole County. Seminole County is doing good, though. I mean, kind of flat. As you can see, closed sales are barely up a percentage point. So, we'll see. Orange County, closed sales, man, down 4.5%. So everybody's been seemingly doing well. Orange County looking a little rough. Check out Lake County. Took a nice rebound. Now, there's pockets in the Villages for any of my Villages folks and clients out there. Villages is starting to rebound, but it's still pretty slow. So just hang on. Okay, hang on. Now, real quick, luxury side of things. In the luxury side of things, and this is Florida. For the year 2025, average sales price is up 5%, which is good. Closed luxury sales up 3.5%, which is good. Interesting. New luxury listings is down. Now, understand these are stats, all homes above $1 million in the state of Florida. All right. Real quick, if you haven't seen, listen, pay attention to the mortgage rates. T-bills moving in the wrong direction right now, but 30-year fixed sits at 6.1, 15.549. But I don't know. We'll see. Things are looking a little volatile out there right now. Speaking of volatility, there is a new Fed chair. You guys have seen all the drama around the current Fed chair and the new inbound Fed chair. Here's the one good part of it. I hate politics. Don't wade in it. But here's the thing I pay attention to. It's at least this new nomination doesn't seem to be shaking things too much. So right now, the markets are kind of handling it well, if you know what I mean. So we'll see what that means, but things are looking steady so far. The reality is the rest of the year, is going to be a lot more of the same, probably in my opinion, than we have seen. Like we're going to see more of the same in 2026. I'll be honest with you. It's going to be a slow rebound year. It's going to feel like we're in, like, you're walking on the beach and it's soft sand and you're getting tired and you're making a little bit of progress, but you're friggin' exhausted and you feel like you're going nowhere. Yeah, the market may be like that for a while. Now, let's be honest. Let's see what this new Fed chair comes in and does. We should see around May, June, if there's going to be fireworks or not. Now, I'm anticipating, there's going to be some changes. There are going to be I think they're going to want to come in and get a victory and make some changes. So we should see things moving in the right direction. But I'll be honest with you, I think everyone would be wise to pay attention to what the Fed said last year, and that's that there's not going to be a whole lot of movement this year or even next. And so what does that mean? Listen, there's no waiting for a great rate. Stop. It's not coming. Sellers, I hear it all the time, like, well, I don't want to sell for where the market is now. I'll just wait. That could be a minute. So everybody just needs to understand a new strategy may need to be employed in order for you to be successful this year, okay? I promise you I can help you with it. If you got questions on that in any way, shape, or form, don't hesitate to reach out. Listen, I hope you found that useful. I tried to be quick. I talk too much. Anyway. All right, listen, thanks so much for tuning in. If you got any questions, don't hesitate. DM me, email me, call, text, whatever. I'll be glad to help. Stay tuned. The market is absolutely wild right now. Do me a favor. If you're not following me, I'm trying to do a really good job of communicating more so on Facebook, on Instagram, on YouTube, just trying to share information so that you guys have more information so that we can make smarter decisions. So if you're not, check me out there and let me know in the comments, like, what do you think? If you're watching this on social anywhere, what do you think? What do you feel is or where we're headed? Do you think the market's going to be better? Are you concerned about our, economic climate? Like things aren't looking so great with, jobs. What about the political environment? I mean, there's a lot, man. We are a hot damn mess right now. I hate to say it. We just are. But I'm an eternal optimist, damn it. And I'm going to stay in my lane and I'm going to keep my head down and I'm going to keep out of all that. And I'm just going to stay focused on what it is that I do. And if that can serve you in any way, shape, or form, you let me know. I appreciate peeps. Again, follow me if you want me to continue to make a fool of myself online. Let me know. All right. And let me know in the comments. What are you guys seeing out there? What are you feeling? What are you thinking? I'm thinking it's going to be a slow walk, slow improvement, but it is going to be better. Okay. It is going to be better. All right, everybody. I appreciate you. Stay tuned. See you in the next one.